Market moves here today with the High Times IPO overview. Right now, I found an SEC.gov article that talks about the issuance of this common stock, and what I found is not the best for all those investors out there. Stay tuned. So High Times is giving out this private IPO. It's not even on the market. So if you have these shares and you get them, you can't even sell them. So this already kind of reeks of scam to me and just a money grab. But we'll dive into this article and the SEC.gov financials, and we'll kind of understand if it's a money grab or if it's legitimate, or if their company is doing great and you're getting a great deal from this private IPO. But first, if you haven't, please hit that subscribe button. It's in the bottom right-hand corner. You'll see videos like this out all the time on stocks, and it just helps you become more educated in the market. So, since the market is just being nuts right now, it's good to have someone to explain it, or someone that's seen it know what's happening. But basically, this IPO, private IPO, you can only go on their website and buy. It's at the High Times investor.com, and you can sign up, give them money, and they give you stock. Seems pretty easy. And this is I don't know how many pages this is, but this must be like 150. And unfortunately, 30 of them, this is the biggest red flag I've seen. 30 of these pages are the risk factors of this company. And I've never seen this many risk factors listed for one company. It could be because it's in the cannabis industry, but aside from that, it's a lot of risk factors I'm not comfortable with. So we'll just go through the listing and the SEC.gov financial and understand what's happening. Basically, they're willing to offer $11 to the public for their shares. They want a minimum of $5 million, and they want a maximum of $50 million. So in between that range, they're looking to get that amount of money. So I might have over-exaggerated. This is the index of all the pages in the table of contents. This is only 78 pages. I thought it was more, but as you're scrolling through it, it just seems like eternity. Page number 4 is a great page, and page number 3, it's just the beginning, like the introduction. It gives you the company overview, and I did this in the last video, so I'm not going to spend too much time. I'm just going to link that video to the top right-hand corner, and these are just all the magazines they have. They talk about their events, how they're in the cannabis industry, and what they plan to achieve. So they did do some acquisitions, and they just talk about that, where the common stock went, how much money it cost. And yeah, so this page gives an overview of the company structure. It tells you how they split up their businesses, and they're all listed down here. So this is the basic structure. And then here's the important part for investors. So if you're an investor, you want to know how many stocks are out there so you can know how much of the company you own. So right now, their existing is 20 million shares, and they're offering about 5 million shares of common stock. So what that means is they're offering a little slice of the pie. A lot of people already have the bigger slice. And if we look down here, it looks like if we add all those numbers up, this is going to be about 23 already existing. And if we have 100% of the stocks that are offered, if they get bought, so 100% bought, the amount of stocks out there is going to be 29 million. So that is about a sixth of the pie is being offered to us. So you have to understand that when you're valuing the company, when you're understanding how much of the company you own. And this is very straight and very open. I like this part. I like how it tells you how many people own certain things and what price they're assumed to get it at. So $11 is what we're getting our stock at. So you kind of want to see what other stock offerings are at. So it looks like we're going to get $11. They've offered $11 to other people, and it looks like they offered $10.65 to the convertible notes for this company. So they kind of got a discount, but you want to see how low some of these are, because that kind of gauges when these shares vest, when people get their shares, if they get them at $11 and the stock's at $11, you're not going to see selling, which is good. So you want to make sure these shares are kind of in line with the price that you're getting them at, because you want to be able to take profit and get profit when everyone gets profit, if that makes any sense. And more share information here, but this is 78 pages long, so I'm going to speed this up. All right, we get to page 14 and we get to risk factors. This is something you have to read over because I can't go over all of these, and there is a ton. As you see, these are all risk factors and it just does not end. So this is going to from 14 down to, and this is still risks again. So we have risks here, 14 down to 32. So there's about 18 pages of risks associated with this stock. And just to go over a few, basically one of the big ones I saw, and I'm doing a lot of scrolling, but is they have to pay a good amount of money very soon. So if they're offering this IPO, it's probably because they have to pay these debts. And this is one of the first things they list on their risk factors, is that they own a senior loan agreement of $13 million, and that is got to be paid by February 2020. Not crazy soon, but obviously they might have other things piling up and they need to pay this by month. And they also have a lot of other loans listed down here. And right here it seems to be that they're being totally straight with you. They're saying a significant portion of the proceeds, up to $12 million, will be used to pay some purchase notes. So a lot of this is to pay debt. They're not using it to invest much in the business. If they want $50 million and they're using about $12 million to pay, you can't expect a lot of that money to fuel the business. And this is kind of sad, honestly, because the site just looks amazing. The movie's amazing, and they're just really advertising this well. So I think a lot of people are getting suckered in. And down here is just a laundry list of risk factors. And so some big ones are the insurance, that it needs to be covered for cannabis related events and all that, because they do hold humongous events. Although they bring in a lot of money, it's just a lot of risk as well and a lot of insurance costs. So I'm going to dive into the next part, get through all these risks, and I'm going to move to the financials of the company. So this is the next important part, and I think this is great for people who don't know how to understand financials and don't know how to look at them and value a business. So I have courses on my website listed in the link on how to do this. This is really, really helpful and can avoid a lot of money loss, because you want to avoid things like dilution. That's something that can just drop the stock price immensely, and you've seen that with HMNY. They have about 1.5 billion shares out, and that's a ton of shares, and right now this company has about 20 million. So you can just see what happens when more shares are added. The price just plummets. But this just shows you the dilution that's going to happen to the existing investors. Not too important to you, but as more shares are added, the people who have shares are going to lose their value. And here's the big number they're hiding on their website. This is the 2017 year-end revenue, and this is 14.4 million, which is actually less than 2016. So they're projecting this like insane growth. For some reason, they only list 2016 revenue, and I don't know why that happens, but down here, let's just see their growth chart for the revenue. They actually don't even talk about it. They only talk about 2019 projections being 50 million. So yeah, revenue's flat. And in 2018, I don't have any confirmation that this revenue is increased. So that's another red flag, is 2018, they're promising this 20-40% increase in revenue. And looking at the numbers, I just don't think that's reasonable. And I'm going to show you why right now. So before I get there, we're just going to show you the assets, liabilities, balance sheet. You want to make sure the company's balanced. If it's not balanced, you can kind of assume that it wants to pay off debt, and it needs to do that quickly to stay in business. So right now we have assets looking at 14 million, liabilities looking at 67, current liabilities 48, current assets 6. So if they need to pay 50 million in current liabilities and they're looking for 50 million in this IPO offering, that is not a shock right there. It seems like it's just a money grab at that point. So company may be doing great things, but your money is not going into the company the way it should be, unfortunately. And here is the 2018 estimates of $23 million with a 58% increase. And then next year after that, 2019 is going to be 53 million with 133.4 increase. So if this number is true, I will be impressed. But if this number can be achieved, I will also be impressed, because that will put this company at a very low valuation. But we just have to understand if that's reasonable, because if that 50 million does happen, this is going to be a great price, $11. But here is the golden number that kind of makes me think 23 million this year is unachievable, because in the first 3 months of this year, 2018, they only reported $1.4 million. So they need to make up about 20 more million for the next 3 quarters or the next 9 months. And the year before that, they pulled in 4.2 million. So for some reason, revenue for the first 3 months is down massively. So aside from all that, I'm just going to list out the big things that scare me about this company. Number one is they have a lot of debt to pay. It seems pretty convenient that they're asking for 50 million if they have 50 million in current liabilities that need to be paid. So that's number one. Number two, the private IPO is a little bit sketchy. Never seen this before. Probably because it's a cannabis company, they can't easily get into the IPO market. And that could be why, but honestly, I've never ever seen a private IPO, and I've never heard of people investing in it. So why should this be the first time? That's a question you should ask yourself. And then third point is the 2018 revenue is lower for the first 3 months of this year, but they're expecting it to be higher overall at the end of the year. Question mark there. How's that going to happen? And revenue's been flat for 2016, 2017, and it's actually down for the first 3 months in 2018. So these massive projections of revenue do not seem accurate, and they do not seem fair. So this is all I got on this stock. If you like this, hit that subscribe button, and if you are subscribed, share this video, because more people need to know about this. And this is Market Moves signing off. Peace.